In this lecture, I'll teach you how to sell efficiently, how to take better sell decision when you're trading, and I'll teach you the concepts I personally use, the methods I deploy to get the best sell price that we can get out of the given circumstances. Uh, and we'll also see through my previous one or two trades how did I manage using these concepts. So let's see. First thing, we have three things over here. The one is structure, second is time frame, the third is moving averages. Now, what we will do is we will learn all these things individually. Structures we'll use, uh, about the trends. Then we'll talk about time frames. Then we'll talk about moving averages. Now, you can either use these individually, standalone, or as I do, I combine all of this together and then uh, use that to make the right decision. So I'll teach you that as well. And if needed, we will switch to the whiteboard as well to explain the concepts. But all in all, there is a lot to be unpackaged in this lecture. So the first thing is we have the structure. And what exactly is the structure? See, when we talk about structure, it's about talking about the trend we have, right? This is what we are dealing with, whatever the trend is. And the trend can either be uptrend or can be a downtrend, and then there can be periods of range as well, right? What an uptrend will look like, it will be a series of higher highs and higher lows. So that will look like this. Okay. Now, how I can use this is if you know, right, these points are also called as what? These are called as higher lows, and these are also called as the pivot points. So, what you can do is you can use the higher lows in the uptrend to manage your position. So, if let's say you bought the stock here, once there is a higher low or a pivot created, and once the higher high is broken, once this level is crossed, then only this becomes a higher low. So keep that point in mind. Now, this becomes what? If initially your SL was somewhere here, this much, now you will shift this SL to here, and that will be called as the trailing stop loss. Similarly, let's say you make another high, and any price movement which is happening above the TSL level is fine. Let's say the price took turn from here, it could also have done this, right? In this case, even this would have been what? Your TSL once this high was broken. So do take care of that in mind. And then let's say, you had this pivot. So now this becomes your TSL. And then let's say one day something like this happens in the stock. This is the exact place where your TSL is hit and you will take the exit from the stock. So this is how you can use your trend to manage your position. Now the second thing is time frame. And what does that tell us? What does that teach us? So see, time frames. What time frames give us is a, a good look, a better estimate. So let's understand time frames. Now see, let's say you are trading and you are trading using, daily time frame. This is the time frame where you look at the setup and everything. You're scanning setups, everything is happening on the daily, your entry and everything, right? Now, what you can do is, let's say you said, I'm a momentum trader. I want to take the advantage of daily momentum as much as possible, and I want the maximum move, right? What we can do is then in those cases, you can switch to a time frame like a 5 minute. Now, why a 5 minute? Why not 15 or even hourly? Because I clearly mentioned you're looking at momentum and capturing the maximum out of it. If you use 15, 30, 1 hour, then it's not about catching the maximum momentum on the daily. And that is the reason we are selecting 5 minute. In that case, what will happen is you will have to look for trends on 5 minute. Similarly, whatever I taught you on the left hand side, right? Now you can use this entire trend study, but on a 5 minute. And whenever this is broken on the 5 minute chart, you will simply take your exit. right? And that is the way you will use your time frames for exiting in order to capture the majority of the momentum. Now, let's say you say that fine, I actually want to get more out of daily. I'm not just here for the momentum, but I want decent size contractions on the daily, which I will endure. But if large size contractions are happening on the daily, something like this, then I don't want to be part of these ones. What should I do in those cases? Now, in those cases, you will shift to a time frame like 1 hour or even 15 minutes. Because what will happen is 5 minutes will give you a lot of pivot points and they will give you fast exits as well. What 1 hour and 15 minutes will give you, they'll give you enough space. They'll give you enough space to be in a trade in order to endure the medium, or you can say shallow pullbacks, or whatever you call them, corrections on daily, right? So here it's not about the momentum, it's about shallow pullbacks or contractions on the daily as well. And if you tell me that no, I want to write the entire daily trend, then it's pretty simple. You don't have to use time frames. Simply using concept of trend on the daily itself will be simple for you. So this is how you can divide the time frames. If you want the maximum momentum, right, then you have 5 minute at your disposal. If you want shallow pullbacks, contractions, then you have 1 hour or 15 minutes. And if you want the entire trend, then the daily is the time frame. And you can do this for, let's say you took the trade on monthly, you can then switch to a daily or hourly to manage the monthly better and trade accordingly. I'm pretty sure you understood the point using the daily time frame setup that we discussed over here. The second thing is, and please note, I'll show you everything on the chart. The last thing, third thing is moving averages. And this is interesting, right? How is this? Now, this will usually be very helpful, especially if you're trying to get the maximum out of momentum, enduring the shallow pullbacks, the contractions, or you want the entire of the trend as well. How is that? See, moving averages are what? Lagging in nature. You know this, right? Now, since they're lagging in nature, they give you space. They give space to the price. And they do not give you haphazard signals at a lot of frequency. They do give you false signals, but not as much as a pivot point would give you or a time frame would give you. Now, this how it will help you in momentum. And I'm pretty sure you're aware there are a lot of moving averages. There are fast moving averages largely, and then there is a slow moving average. So usually, you call your 7 or 5 or 10 moving averages fast, and the moving averages like 20, 30, 50, 100, 200 are usually called as the slow moving averages. Now, what you can do is if you want the entire momentum to be traded, right, the fast momentum, you can use any of these moving averages or whatever you have been using, whatever you're comfortable with, whatever you have done practice on. If you say, I want to endure the corrections or I want to ride a trend of a given time frame, then these are the moving averages which can be very, very useful to you. Now, another thing that you can use over here is something called as the moving average cross. So let's say you take a trade on daily time frame and you say that I want to take out the entire trend and I'll only get out of the stock if my 20 moving average goes below 50. The day this happens, the next rally that will happen after 20 crossing below 50 is the rally where I will sell my stock. That is one way. Now, you can use 10 crossing below 20, you can use 5 crossing below 10, you can use 50 crossing below 100, or any other combination as you like for how much ever long you want to uh, take the trades for. You can do this. So this is one way you can use, your moving averages for very simple signals. Fine. Now let's go to the charts. Let's see the charts. Let's understand these three things on standalone basis. And then I'll tell you something very interesting, which I personally do. Now I'll also give you one secret over here. You probably would have heard a lot of people talk about previous day low and keeping previous day low as the SL. So let's talk why exactly that is, why it works, and let's understand what is the logic, what is the reasoning over here. Now, see, let's say you bought this stock with me over here somewhere around this reason, right? And the reason why you're buying this stock is one that you want to majorly look for the momentum and maybe try for some uh, long-term trade as well. But that's not the priority. The priority is get the momentum and get out. See, you had the momentum in these candles, right? And where did the momentum stopped or it broke for a few days? On this candle. Why? What did this candle do? This candle broke the previous day low, right? So what I did is I exited, I think 80, 85, 90% of my position over here. So my trade was from here till wherever the point. And then what happened for the 1, 2, 3, 4, 5 days? 5 days the stock did nothing, right? And if you are a momentum trader and you are involved in these 5 days, when did you did not plan it in the first place? That's a bad thing. But let's see what this candle did. So this candle broke the previous day low. Now, why this as a stop loss or trailing stop loss works or is usually used? Because if you will think, whatever we learned till now is the logic and reason. Previous day low, usually, or in fact, I would say majorly, on very lower time frame like 5 minute, is nothing but a structural pivot point. And break of previous day low on daily time frame simply implies that the structure broke down on smaller time frame. And that is why a lot of people use previous day lows as their SLs or even as their TSL. In fact, if you are looking for momentum, you are doing momentum trading, and this is how it is looking. Previous day low is a very good way to manage your position, especially for selling in momentum. Now, so 80%, 90% of the position was traded for momentum, and what concepts were used to manage it? Trend concept along with time frames. Through what? Through previous day low on the daily. So now you understand it all. And the rest of the position, how was it used? It was based on simple, daily, relevant, visible, structural pivot points, which is this one here. And this pivot point only became a pivot when this was broken. Now you will say, okay, what if this was not broken? Over here, the price came down. Will you still have this SL? No, then this will not be your SL. Okay, then that raises a question. What exactly to do? In those cases, what you will do is you will use the help of moving averages. Now, see, since you have 80-90% sold the position here and very minute part of your position is left, allow it some space. So, what you will do is now you will use either the trend concept on this given time frame, right? If a pivot is made, this becomes your TSL. But what if the price comes down from here? In that case, you switch and use the moving average. That if my 20 moving average crosses below 50, I will exit that rest of the position in that case. Or if the pivot is made over here, then simply I will make this as my TSL. Then what happened? Another pivot was created. This one over here. Once this high was breached, this becomes my TSL. And same thing basically kept happening, right? Once this high was broken, this becomes my TSL. Okay. One more thing. Let's say my TSL was here, okay, and the price went up and it did not break this high. Rather, it started coming down. What to do in that case, sir? If the price comes here, let's say at around this level, touches this level, but my 20 is above 50, should I sell or not? The answer is very simple. Answer is no. Do you know why? See, when my moving average of 20 is above 50, and let's say the price is below 20 moving average and between 20 and 50, and it is touching, so the price would have been somewhere here. It is touching this level, which is a structural point, and the price is between 20 and 50. Please do not sell it, because that is exactly the place whether you should be looking to add more. Why? Because that is a structural point. If that is broken completely, price goes below, then you may decide to sell it. But if the price is just hovering around there, right, and my moving average of 20 is above 50, then that's not a sell. And everything else is taken care of also. The relativity and DNA. What is that? Please refer to the link below. Uh, in the Telegram group, you will find a PDF. Please read that. You will understand. So that is a very crucial point to understand. In this case, the price went up. So you know what will happen? This will be my TSL. Now comes the interesting part. Now see what happened. The price did not close above the breach this level. What should I do? Should I keep this as my TSL, or shall I move this over here? That's a very tricky situation to be in, right? Now, see, is this a valid pivot point? I'm not asking a structural or a trend. I'm asking, is this a valid pivot point? A pivot point is nothing but a turn point from where a turn happens. Or what you can also say, in an uptrend, a pivot point is nothing but a demand zone, a demand area where the demand came from, the price went up from. You're like, okay, sir, no, it's not very clear to us. No worries. Use the concept of time frame and let's say switch to the hourly. And what do you do then? You will see that on the hourly, you can clearly see a demand zone or price taking support. You can clearly see it, right? And hence now this is a valid pivot point. Okay, so now you have taken a note of it, drawn a line on this. So this becomes what? My trailing stop loss. Now see here what happens. The price comes and hovers around 20 is above 50 and the price is at the support region. What to do? Should I wait for 20 to go below 50, or shall I sell my stock if the price closes below this? What will be your answer? The answer is, if the price closes below this and stays below it for 1 2 days or 3 days, please close the position. Do not wait for 20 to go below 50. In this case, it happened somewhere over here. Now, that is one thing. And then, you just basically kept going down, right? So, this is how you can use these structural points, because I'll tell you one thing: what a lot of times will happen with you is you have this structural point noted over here. The price will come like it came over here, then it will give you a very good candle here, and then again it will set up and go up. Those are the cases you don't want to miss, right? And that is why combining the point of structure along with moving average will help you. Simply using moving average cross is not very efficient, and simply using your pivot points may also lead to some trouble at times, right? So it becomes very important to understand this. Let's take one more case study over here. Now, this is another trade that was taken around over here March 2023. So let's say you bought somewhere here. Now again, we will use the same concept. Previous day low for the majority of the quantity for a momentum trade. So wherever the previous day low gets broken is your exit. Over here, this becomes the exit day. Now for the rest of the position, what are you doing? You're doing the pivot point, a structural point. So this becomes a structural point over here, TSL. Once this is broken, now that is broken, there is another structural point over here. Okay. What is next? The next point becomes over here, right? And then you had a one-way move up. Then this became a structural point over here. Then another one-way up move you had. This becomes the structural point, and basically it kept going on, and then gave you this point as well, right? Came around 50, and 20 is above 50. Now let's see what happened after that. Then nothing happened honestly, and then you had this one as well. So now this becomes your point here. Now, something very crucial for you to understand. The stock is over here, and if you know, you will notice. If you see the entire data, the stock is in the all-time highs, right? Now, let's say you had your TSL over here, and then you move up. Now, see from your original position, how much are you up on this position? It's almost 128%. And I would say that's huge in span of a few months. True. And then the stock without 20 crossing below 50 is trying to move up. What does that mean? Relativity is on W or even on the monthly. And that is not a good thing. Now what you can use? Now you can use time frame, concept of time frame and pivot or structural point on 15 minutes or 1 hour. So let's say you go to the 1 hour and you figure out that where is the structural point. There is a structural point over here. Then this becomes a structural point. And after which there is one more structural point. If you want to consider this or this, in 128%, this much margin is not going to make a huge difference for you. So let's say you have this one. And once the now hourly has spent time below this, then you will decide to sell it, which happened over here. So this becomes your selling region, selling area for the remaining position. Now, through this, whenever you are in a dilemma, the stock has run up a lot, I don't know what will happen, you can switch between these combinations. When to use structural trend point on the given time frame that you are at, and when to use a smaller time frame with the trend structure, and when exactly to incorporate your moving averages. Because I'm pretty sure you have heard about moving average cross sell, but now you can see, that is not the most efficient way. There are better ways, especially the cross strategy performs better, is more efficient when you combine it with either the structural points or the time frame, right? And you will also notice that this line that we have drawn is nothing again coming to what? Previous day lows, right? That is the concept that you are taking away from this lecture, especially that why previous day lows are used as a stop loss or even used as a trailing stop loss. This is exactly the reason. These three things that you studied from me here, the trend, the structural points, the time frames, and moving averages, when you combine these, you will have the answer as to why previous day lows work really great, especially in momentum trading, assuming you are on the daily time frame. You can use this even on a weekly or monthly, but that would mean different things on those time frames with different dynamics. But I hope now you understand what exactly to do and how to go about your sell decisions, right? Why previous days lows is nothing but just a substitute for using trend pivots on a smaller time frame. So if you are trading momentum on daily, you can use a time frame like 5 minute and use structural points from that time frame to simply execute your sell positions. So I hope you learned a lot of things about sell, but there is one more key point that I want to share with you, and I decided to keep it at the last of the video for those who have truly watched it. And the secret mantra is, and you might already be knowing it, is that if you put on a trade, whenever you put a trade on, whether you will profit from that trade or you will make a loss is decided by where your entry is, where you are taking the entry. That decides whether that trade is going to be a profitable trade or a loss making trade. How much you profit, you know, your magnitude of profit or magnitude of loss, mathematics term, magnitude of profit and loss is decided by where do you exit and how do you do it. where you sell majority of the position and where you do not. This is how it is. So please understand, your exit is never going to decide whether a trade will be profitable or loss. That is already decided where you are taking an entry. So this video, I've talked majority in the direction of where to exit, how to exit. In the next lecture, I will try to talk about this subtle point of where the entry is, and that will tackle the point of buying above the high of the candle and why this is one of the worst strategies you can follow. So let's see. I hope you are excited for that lecture because I am very much, and I'll see you in that next lecture.